Hey everyone, Couch Investor back to another video for today. So let's talk about Activision Blizzard. As you might know, at the start of the year, it was announced that Microsoft is going to acquire the company for around $70 billion. They're going to pay $95 a share, which is significantly higher than the price it is today. So let's discuss whether or not it is still worth it to buy today, what are the risks, and what is the reward to buy this stock today. So as I said, at the start of this year, Microsoft announced that they're going to buy Activision for $69 billion. But as we all know, when big tech companies make such an offer and such a move, there's usually regulations that come into play. So a couple of days ago, this report came out that the regulators in the UK are looking into this as an antitrust move, which to be honest is completely normal, right? Microsoft, a huge company, buying another huge company, Activision, in a very, let's say, big and growing gaming industry. Well, what might the implications be there? So the CMA said it will consider whether Microsoft Activision takeover may harm competition through higher prices or reduced choice. Antitrust enforcers around the world are lining up to review the $68.7 billion deal, which was announced in January, and if approved, the acquisition would have huge implications for the $190 billion video game industry. Now, Microsoft already said from the start that the games that Activision published, makes, the Call of Duty, Diablo, World of Warcraft, etc., will still remain as it is today, meaning available on other platforms as well. Because as you might know, there's lots of games that are only available on Xbox or only available with Microsoft Windows on PC, or maybe some competitors. PlayStation makes games that are only available on PlayStation. So Microsoft already said here that these games will stay available to the other platforms as well, which is already a bit better for regulators. Now remember, when that deal was announced, another huge and famous investor also has taken a stake in the company. So Warren Buffett says that Berkshire Hathaway owns 9.5% of Activision Blizzard in a merger arbitrage bet. So what he basically said is this: we see here a good opportunity for a merger arbitrage, which means that right now the stock price is much cheaper than what Microsoft is going to pay. Microsoft will have to pay $95 right now, or back when they opened their position, it was around $75. So the arbitrage here, the upside is around 25%. Now the downside here is, there is also obviously a downside if the deal does not go through. But if the deal does not go through because of, Microsoft, then they will have to pay around $2 to $3 billion to Activision, which means that Activision will have more cash on their balance sheets, which will make the price of the stock obviously automatically a bit cheaper. So anyways, if the stock price drops because the deal does not go through, but Microsoft pays that fee, automatically your shares are, let's say, worth a bit more because the company is worth a bit more as well. But if the deal does go through and you hold shares, then, you'll get $95 per share, so a nice premium there. But if the deal does not go through because of Activision, so they will have to pay that $2 to $3 billion, and that will completely liquidate all of their profits, all of their cash for the following year, for the projected year, and then obviously the shares will drop more and more. But more on all of that in just a bit. If you want to support this channel, do check out the link down in the description below or in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Also do check out all the other links down in the description below. Some of it might actually save you some money. So this is where I'm going to show you again a quick overlook of Activision Blizzard. So as you can see, yes, it had some cycles before, then obviously COVID, then revenue grew quite nicely. Free cash flow positive in the last 12 months, $2.14 billion. That's what I said. If they have to pay that fine, it all goes away. Return on equity just under 15%. Then drawdown from peak is only 28%, and that's because, the market semi-anticipates that deal to go through, so obviously the price of the stock does not drop more, but it was down 45% before that deal was announced. And then gross profit margins quite nice there at 73.26%. And I'm going to go over quickly the presentation on how the both companies might perform together. So these are the presenters of this presentation. Obviously, Satya, CEO and chairman of Microsoft, Bobby Kotick, CEO of Activision Blizzard. Yes, all the scandal and everything resounded because of this guy right here. Then Amy Hood and Phil Spencer. Now, Phil Spencer, he's going to take over. So no more Bobby Kotick as CEO of Activision Blizzard. That will go under the CEO of Microsoft Gaming. So for those that are not paying attention to the gaming world, this is basically how it looks. We have 8 billion people on this planet, 4 billion internet users, and 3 billion players. That includes mobile gaming, of course. So Microsoft and Activision Blizzard, the synergy. So first of all, on the content side, you have legendary games and billion-dollar franchises like Call of Duty, World of Warcraft, and then with King, you have obviously Candy Crush. Then as a community, nearly 400 million Activision Blizzard monthly active players, 25 million plus Game Pass subscribers, so quite a nice audience there. And then for the cloud, which is obviously the next generation of gaming experience, you won't really need hardware, console, everything will be able to play and run on the cloud. So millions of Xbox cloud gaming users in 26 countries, and that will probably grow more and more. Nvidia is doing that as well, and probably other big companies as well, because again, cloud gaming is much more accessible. Obviously, you will need a good internet connection, but you will not need to buy new hardware every now and then. So again, a quick overview of Activision Blizzard. Obviously, Overwatch, there is Overwatch 2 that is coming out later this year, a new Diablo game, new World of Warcraft on mobile, and an expansion maybe I think in 2023, new Call of Duty game as well, Candy Crush, still crushing it, then all the other games out there you all know. Maybe you're not familiar, but here you can see some of them. And if you add that to the games that Microsoft or Xbox now has under its umbrella, Halo, Fallout, Flight Simulator, although with Flight Simulator you really need the top of the line computer to run that game, because otherwise your computer might actually sound like a plane. And this again is a basic overview of the deal. So $95 per share, $68.7 billion in enterprise value, all cash consideration. And this deal is expected to close in fiscal year 2023, I believe more specifically in July, so around 1 year from now. And again, in 1 year, a lot of things can happen. So there you have it. That's the major overview. Now again, the risk reward here is pretty interesting because the upside is 25% in 1 year from now. And if that does not go through, yes, the stock might go down a little bit because, let's be honest, if this deal was not announced in January, obviously the stock price, the share price of Activision would have been much lower because, the overall market has come down, expected a slowdown in gaming content, games overall, and spending as well. So the stock price would have taken a hit. Now, 1 year from now, let's say half a year from now, maybe the market will look a bit better. Even if we're in a recessionary period, maybe the market would already priced everything in. Then even if the deal does not go through, the stock price might take a smaller hit than the 25% upside that it could get if the deal does go through. So again, the arbitrage bet here that Warren has taken here and many others as well is pretty compelling. Now, are you playing that game as well? Leave it all down in the comments below. Right now, I'm really thinking about it, but as of now, I'm still waiting for the quarterly earnings. I don't plan on adding or opening a position in anything right now. I'm looking at this earnings season pretty closely to see where I want to add some more cash. Now, obviously, do share all your thoughts down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next video. Bye bye.